What if I told you, you don't need $500,000? You don't need to be wealthy. You don't need perfect timing to own your first rental property in Canada. Let's break it down. In smaller towns in Canada, in provinces like Alberta, a property around 600,000 is often not just a house. It can already be a fourplex. That means four separate rental units, four rental income, and one mortgage payment. Instead of one family paying your mortgage, you have four tenants contributing, and that's leverage. And here's the powerful part. With one strategic purchase, ordinary people can control multiple income streams. You might be closer to qualifying than you think. And let's look at the numbers. The reality most people experience. Thousands of hardworking people in Canada right now have stable jobs, earn consistent income, pay rent or mortgage responsibly, and avoid unnecessary debt. They are doing everything right. But there's one problem. They are only building savings, and savings alone rarely creates freedom fast because inflation reduces buying power. Property prices moves over time. Opportunity often moves faster than fear. So money sitting in the bank slowly loses its value. The real shift happens when income turns into assets. So instead of asking, how much can I save? Start asking, how can my money buy something that produces income? That mindset shift is everything. Numbers don't lie. A realistic Canadian example. Let's make this practical. Imagine buying a fourplex in a smaller Canadian market for 600,000. So you put down 20%, that's 120,000. Your mortgage then becomes 480,000. Now let's assume that each unit rents for 1,500 and that's $6,000 in total rent. Now expenses. Mortgage payment is around 3 to 3,500. Property taxes, insurance, maintenance, vacancy reserves. Let's estimate total monthly expenses to around 4,500 to $5,000 per month. So what happens now? The property might produce a small cash flow. It may break even, or it even might require slight monthly support from your income. But here's what most beginners miss. Even if cash flow is small, your tenants are paying down your mortgage. After 5 years, the mortgage balance might drop from 480,000 to around 410,000. That reduction happened because renters helped pay it. If the property increases to 700,000, your position now has changed. Property value now is 700,000. Mortgage 420,000. You have a total equity of 280,000. And remember, you started with $120,000 for a down payment. Through leverage, time, and rent payments, your equity potential more than doubled. And you did not need to flip. You didn't need extra income. You didn't need perfect market timing. You simply held onto the property. That's how wealth compounds slowly. Why this matters for beginners? Most beginners think they need $1 million, multiple properties, huge experience, and having the perfect knowledge. That's not true. You need a stable income, a down payment, basic financial preparation, the willingness to act. One property can build equity, increase in value, improve cash flow over time, become leverage for the next purchase. And once you own one property, banks see you differently. You see opportunities differently. Your confidence increases. Momentum starts small, then compounds. Common fears that hold people back. Let's address the real concerns. Fear one is, what if the market crashes? Markets go through cycles, but long term demand in growing Canadian regions continues because the population is growing. Immigration supports housing demand. Supply often lags behind demand. Real estate investing is about time in the market, not predicting short term movements. Fear number two is, what if the tenant does not pay? Risk exists, but risks can be reduced by proper tenant screening, strong lease agreements, background and income verification, keeping reserves for emergencies, professional systems reduces emotional stress. Fear number three, what if I fail? Here's the reality. Doing nothing guarantees no growth. Inflation guarantees your money loses value over time. The biggest risk? Waiting 5 to 10 years and wishing you started earlier. Most people regret inaction, not calculated action. Imagine two people 5 years from now. Person A is still saving, still researching, still waiting for perfect conditions. Person B bought one rental property, built equity, learned through experience, built confidence. Same starting point, different decisions, different outcomes. You don't need 10 properties. You need your first one. Because once you cross that line, you stop thinking like someone who rents. You start thinking like someone who owns. And ownership changes how you see money forever. If you watch this far, it means this topic means so much to you. So here's your next move. Check your credit score. Speak with a mortgage broker. Study one small market deeply. Analyze one property every week. Take action instead of consuming information. Comment ready if building wealth in Canada through real estate is your goal. Subscribe. Share this with someone stuck in the same cycle. Start moving today. You are closer than you think, not because of luck, but because you're thinking differently now. Let's build.